of course, what it means in the grand game of dominoes among the rivals and competitors of these companies, what they're waking up to as they read these headlines.
I mean, if you look at it, yesterday's headlines was Bristol Celgene, right? Is that going to get delayed? Now you've got this big merger coming too. This is all about growth. We are at that stage in the economy.
Hold on. Is this about growth or is this about savings?
It's about a combination of both. It's about keeping your earnings per share and growing your earnings per share, either through cutting costs, which they're going to do, and then finding other products to put your pipeline. You're doing this now at the stage in the economic cycle because you're looking to keep your multiple up and you want your stock to actually go up. At this point, we're so late that all these CEOs, and this is not just going to be pharmaceuticals, this is going to be other sectors that you're going to start seeing this. Because as you find more and more ability to merge, I think that's where you're going to see more action there.
You look at the premium on this transaction. What are we saying? It's a 45 plus percent premium. That's substantial.
So what does that tell you? That means it's scarcity of deals. So CEOs are going to be looking for opportunities, and those who are selling are going to ask for more and more premiums. So I think it's going to be an interesting game going down the road. And I wouldn't be surprised in any of these deals that you see other suitors coming in too, because now other people are going to get left out.
I would argue to you, though, and I'm curious where you land on this, Mike, down 8%, which is what AbbVie is looking like right now. In a traditional transaction, as ARBs set up their positions, if you're down 4%, 5%, that's all within range.
Yeah.
8% says something different.
It might actually explain why the stated premium at the pre-open levels was as high as it was. Maybe they thought there was room for it to come down. I think AbbVie's been a little bit in the penalty box. The stock's down quite a bit off its highs. Street doesn't love the stock at the moment, if you just look at how analysts are set up with it. And also, I do think that premium, mostly cash rather. So, cash is free and easy to get for these big companies. So that's not the issue. I do think you have to remember that Allergan was over $300 stock 4 years ago.